Chin Loo, thanks a lot for joining us. Well, what was your reaction to this? I mean, really, it's just a bit of legislation which may... Well, it's not legislation yet, but it probably won't make it into law, will it?
Well, I think it's hard to say, but I think that the U.S. House of Representatives has less support for this bill than the Senate. So, and as well, it needs the president's signature, so it's still quite uncertain. But clearly, I think it's given a bit of a bite into U.S.-Sino relationships, and whether those, those issues could come back into the marketplace. And certainly as well, today's fixing of dollar-China onshore and moving sharply higher, I think it's as well, brings this political issue into the forefront of the markets. And we are seeing Asian currencies trade weaker against the dollar as a result.
Yeah, Chin Loo, but at the same time, the yuan has been appreciating. In nominal terms, it's up about 20% since the peg was first, removed, if you would like, just made more flexible.
Mm-hmm. Yeah, certainly. I think it is in China's interest as well to appreciate the Chinese yuan on a very modest and gradual basis. I mean, growth is strong in China, inflation has been rising, and there's been very strong capital inflows as well into the country. The trade account has been holding quite well. The trade surplus has been narrowing from very large surplus levels about 5 years back, but it remains substantial, and clearly China is still coping with, the inflows of capital seeking stronger returns. So I think across all measures, there's a reason for the Chinese policymakers to continue to allow the Chinese yuan to appreciate, and that's a policy which they have been comfortable with since its float.
Right. What do you think foreign exchange traders at the moment are really concentrating on? What is the biggest thing on their minds? Is it still the European debt crisis, or does it go beyond that?
Well, I think it still is that, because obviously they do want to see, have in place a plan whereby there's some backstopping of European banks, and that the commitment level to the EU financial system is strong, somewhat like what we saw in the US with TARP and so forth, when the US headed the same way. So I think the markets do want some assurance that there will be some backstopping, and therefore the credit issues will then fade from the market. So it is still EU problems that's taking the spotlight. In Asia, beyond this currency war that's being waged between the US and China, market players as well are watching for signs of a growth slowdown and how policymakers react to that. So following from the BI's surprise rate cut yesterday, all eyes will now turn to the MAS when it sits on Friday.
Okay, well, we had also Jean-Claude Trichet, outgoing ECB boss there, saying that Europe is facing a crisis that is which has reached systemic levels. What do you make of that?
Mm-hmm. Well, clearly, I mean, if you want to give an example of systemic risk and risk being very elevated, you have nowhere else but to look at Greece, where, Greek debt CDS was trading at default levels. So clearly the markets were at that sort of stress levels, and another measure of that will be volatility, rising as well to extremes, and as well some of the credit spreads in sovereign CDS in European countries have been very elevated. So across the board, clearly the markets were signaling that, stress levels were extremely high, and they were losing patience with regards to how EU leaders address the situation in Europe.
Very quickly, does this mean continued strength for the dollar, what you're saying?
Well, I think the dollar strength has already played through with the euro's quick collapse and the dollar surge against Asian currencies. So I do get a sense that precautionary dollar hoarding has been quite extended. So moving from there, I mean, clearly EU developments are still in the driving seat. But with precautionary dollar demand fairly well extended, I do think the pace of dollar appreciation will tend to slow from here.